So on my journey to invest in the best and most efficient dividend stocks in each of the sectors, I took 10 positions that I was in the energy sector and I narrowed it down to 4. I think I'm going to narrow it down again. I may or may not have chosen the right 4. However, I'm going to share with you what I've done so far and then maybe ask for some thoughts and feelings about what you would do going forward. Welcome to the channel. My name is Paris Clough and this is Financial Self-Reliance. On this channel, I absolutely love helping you manage, protect, and grow your money. And in this video, we're going to talk about how to grow your money through dividend investment stocks. Dividend investing is passive income. It's a great way to create passive income and to develop a large stock portfolio and stock holdings in dividend-paying companies that will pay you that consistent income quarter after quarter, month after month, year after year. And then you can live on that passive income as you get a large enough balance of individual dividend paying stocks. So what I want to share with you today is my journey to consolidate. I had almost 100 dividend stocks, different dividend positions, I should say. And then I narrowed it down to 80, and then I narrowed it down to 70, and now I'm at 58. After what I did this last week in selling off 6 of my positions and staying with 4 of the positions that I had in the energy sector, I've actually now down to 58 positions in my portfolio, and I'm headed towards 40-ish. So I got another 15 or 20 to sell off and kind of consolidate and narrow down to those really good ones. So what I want to do is jump right in and show you my spreadsheet, show you my trackers, and show you where I am in the energy sector. This video is going to focus in on energy sector dividend paying stocks. So this is my spreadsheet that I use to track all of my dividend stocks in the Webull account. Now Webull is the platform that I use for all my dividend stocks. It's also the platform that I use for my options trading. And so part of my strategy in investment is to do dividend paying stocks and options trading with those dividend stocks. And so there's some strategy there that I'm using, and so part of that's going to play into what I'm going to share with you today in terms of which stock or why I chose the stocks that I chose to stay in the energy sector. So Webull has a program right now. If you open up an account, start an account with them, click the link in the description below, open an account, and you'll get to have several free stocks. I think 5 free stocks is what they're going for right now. So there's no better way to get started in the stock market than to have 5 free stocks as far as I'm concerned. So click the link in the description below, open up a Webull account, and get some free stocks. So let's take a look right now at my spreadsheet. Now I had 10 positions. These are the 10 I had before. So I had ticker symbol EPD, BPT, XOM, BP, AM, CEQP, PBA, SUN, and MMP, and then lastly OKE. These are the ones that I had in my possession. These ones down here were all watch list. And some of these I own on my M1 Finance account. So this is my Webull account portfolio spreadsheet. So I sold AM, CEQP, PBA, SUN, MMP, and I stayed in EPD, BP, XOM, and BPs. But I'm going to share with you some of the things and rationale behind why I stayed in those 4, and hopefully ask for some questions for you later on. So let's jump into the dividend tracker. This dividend tracker is what I use to help me kind of keep my dividend yield as a whole. Looks at my annual income, gives me a dividend grade for each of the stocks that I have. So the dividend tracker, there's a link in the description below for you to join the dividend tracker. There's a free version and a paid for version. If you do the free version, you get access to several things, and it's a very great resource. If you do the paid version, you get access to more things. So what I'm going to share with you today is from the paid version. So if you do the free version, you may not have access to some of the same things I'm talking about. So, and I also have my portfolio over here at Seeking Alpha, which gives me a ton of research and data and information, and I love Seeking Alpha's program. So let's take a look at the first one here, BP. I just did this alphabetically, so hopefully it makes sense. BP has a dividend grade of 45 out of 100, so it's less than half. It's in the yellow, headed towards red, orange. Dividend growth's not that great. Dividend yield 4.36, really nice dividend yield on BP. And BP is as you know, is a gas company. They provide gas. It's a gas station. So what does Seeking Alpha have to say? Seeking Alpha has some of the same things. The rating summary over here says that it's a buy, or hold. Quant says it's a hold. BP is one of those ones that I've had ever since the beginning. One of the first stocks positions that I got into. So whether it's nostalgia or something else, I don't know why, but I just decided to keep BP in my portfolio. Now BPT is another energy stock. It's got a 27 dividend grade, which is worse than the other one. So again, this is one that I've held on to for a while. It dipped really low. I think I had some money in it, and then it dipped really low, and I was like, oh no, I'm gonna lose everything. And then it shot back up, and now it's doing really well. It's performing really well based on when I bought it and my cost basis and where it is right now. It's actually performing really well. So BPT says here the yield on BPT is 10.84. So that's a really, I don't know if I can zoom in a little bit more. That's a really good yield. Right now the dividends are, actually says over here, dividend yield of 26% moving forward. 5-year growth rate is -12, so it's not really that great of a company in terms of the last 5 years, but I bought it at a pretty low price, and it's shot up for me. It's actually been a good growth for me. So I don't know why Seeking Alpha has it here like that. So the next one I want to share with you is actually not in alphabetical order. It's ExxonMobil. ExxonMobil's got a 76 out of 100 on the dividend tracker. Excellent company. In fact, these guys are really looking good. They were doing really bad for a long time. I bought several shares, not enough. I should have bought more. And now they're almost $90 a share. And it's a significant growth. It's probably one of the best growth stocks in my portfolio right now. And Seeking Alpha has them listed as a strong buy. Their earnings are fantastic. 1 year, 50% growth in 1 year. Dividend here is a C. Dividend safety is a C. 3% is the growth rate for the last 5 years. Dividend yield is 3.82. Payout ratio is 51%. Excellent payout ratio. And ExxonMobil is one I kept. And I believe that they're a strong company, and I would love to buy more shares of ExxonMobil. Except when I bought them, if you look at my portfolio here, when I bought ExxonMobil, I bought it at $50 a share, and now it's worth $90 a share. So my 10 shares of ExxonMobil have almost doubled, which is excellent. But I'm kind of sad because now if I start buying in, I'll be buying it at that much higher price. So it is what it is. I'm glad that the 10 that I have almost doubled their value. So let's take a look at the next one here is EPD. EPD pays a fantastic dividend. They're a 20 out of 100, so they're not really, the dividend grade is not looking very good for them, but the dividend yield is 6.83%, and this is just showing you the charts and how they've grown and some of the things that they've done for you to be able to do some research. So I would say under EPD on Seeking Alpha, it says they're a buy, and a hold. The dividend safety is not even registering, but dividend yield is a B on their grade. Dividend yield here, 6.94%, payout ratio 84%, great payout ratio, 5-year growth rate. The one thing, I like EPD because they pay a really nice dividend. They're a solid company. It shows that they're doing well. Their price is right. It's a good price to get in. One of the things that concerns me is that it's a limited liability or it's an LP, so a limited partnership. So what that means is that as you own shares in this stock, you're actually a partner in this particular business, and you'll get a K1 at the end of the year. When I got a bunch of K1s, several of the companies that I sold off this last time, one of the reasons why I sold them off is because I got a K1 and my CPA was like, hey, we're gonna have to charge you for each one of these K1s. And I was like, I don't want to have to pay extra money for my CPA to be able to process all these K1s. So I'm either gonna get rid of all of the stocks and all the limited partnerships that I had so I don't have any K1s to deal with, or I'm gonna double down and focus in on just one of those limited partnerships and put all my money into the one and really build it up. Because he said that if you're only going to own a few shares, it's not worth it to have the K1. But if you're going to own, 10 or 20 or 100 shares, then it's worth it. And so EPD is one of those ones where I really want to own more, but I'm just, man, I hate taxes. And having another thing to deal with in taxes is like, seriously, is it worth it? What do you guys think? Do you own EPD? Do you have it in your portfolio? And if so, what are you doing regarding the K1? Are you okay with that? Are you seeing that your CPA or your tax person is asking you to pay more money because they now have to process a K1 for you every year? What are your thoughts? What are your feelings about the K1 and EPD? I know there's a couple of you out there that hold EPD, and I hope you watch this video so that you can tell me what you're doing. So let's take a look at the next one. Ontario Midstream Corp, ticker symbol AM. This is another one that's 46 out of 100. I actually sold AM. Now we're getting into the ones that I sold. I think that's the order I put it in. I put it in the orders of the first ones are the ones I kept, and then the next ones are the ones I sold. So AM I sold. They were one that was 46 out of 100. This is the ones I wanted to get rid of. They literally had a quant rating on Seeking Alpha of sell. So when quant ratings say sell, I'm going to sell. The next one here is CEQP, or Crestwood Equity Partners LP. See that LP right there? That's a limited partnership. That means that you're going to have a K1 if you own this company. They had a 19 out of 100 grade, and Seeking Alpha has them as a sell. So I just followed the advice, and I don't want to have another K1. If I want to have any K1s, it's just one. I don't want to have multiple K1s to have to deal with every year with my CPA and my taxes. So the next one here is PBA, Pembina Pipeline Corp, PBA, ticker symbol. They're 52 out of 100. Seeking Alpha has them as a hold, buy, hold. I definitely sold PBA to consolidate, to get that money to be able to put it into one of the stocks. The next one here is Sun, or Sunoco LP. Again, an LP, limited partnership. That means that you're going to get a K1 at the end of the year. It's a 16 out of 100. Wasn't worth it for me to keep it, and so I just decided to sell. Even though the dividend yield is 7.96%, fantastic dividend yield. They're a hold, buy, hold over here on the ratings. They do they got an 8% dividend, almost 8% dividend yield, but it's just, I don't know. If I'm going to focus in on one or two positions, I want to focus in on one or two positions that are doing a little bit better than this one. So the next one here is MMP, Magellan Midstream Partners. Again, it's a partnership, so it's a LP that you got to worry about, a K1 at the end of the year. So I was like, it's a 29 out of 100. Not really doing that great, so I got rid of it. MMP is 8% yield. This is another example of when I first started in dividend investing, I went for yield. It was all about yield. I was like, man, I'm gonna make 7, 8, 9, 10% just from the yield, let alone what the stock is actually growing or doing. As you can see, it's only grown 0.81%, but the yield is 8%. I mean, it's fantastic yield, don't get me wrong, but I'm just not interested in having more stocks where I've got to deal with more tax issues and a K1. I mean, I'm already having to deal with the tax issues and ramifications of having an account, but to have to deal with K1s as well on top of that. I think you get the idea that I don't really like K1s. The next one is OKE, which is an energy stock here, and they have a 45 out of 100, and Seeking Alpha has them as a 5.6% yield. They have a hold all the way across the board. Now, they have a great safety, growth, and yield in their consistency here, but I still decided to sell this one. I will, however, more than likely keep this one on my watch list and buy this as time goes on. As I decide to maybe expand my energy sector stocks and positions, I will probably buy OKE again. So before I get into the one stock that I put all this money into to get to 50 shares, I want to go through what I share with you here as a sector, as a screening that I did in the energy sector for the top energy sector stocks that I should get involved in. And Chevron is doing fantastic. They're top of the list here. The Williams companies, DVN, GLP, EPD is in the top 5 right there. So these are ones I'm going to continue to have on my list. EPD is probably part of the reason why I want to keep it, is because it is in the top 5 on this sector list here, this screening list that I did on Seeking Alpha. So I do have some Chevron. It's not in my Webull account. It's in my M1 Finance account, because Chevron has a deal with M1 Finance rewards card. If you use the card at a Chevron and you own Chevron in your M1 Finance, then you actually get more cash back than you would otherwise. So I hold Chevron in my M1 Finance for the rewards card, so I can get more money back as I use my M1 rewards card at the gas station. So let's just jump back here to my spreadsheet. So the one stock that I put a bunch of money into is BP. I bought 45 shares of BP with the money that I got after I sold all the shares and positions of the other stocks that I shared with you. But I'm thinking that I may have made a mistake, because I might have put all that money into EPD. So help me understand what you would do if you had a chance. And here's why I bought BP, by the way, and why I'm looking at BP versus EPD is because I can do weekly options trades on BP and weekly options trades on EPD, because I want to build up my portfolio of dividend paying stocks to 100, so I have a round lot. And then when I have 100 shares, I'll be able to do covered calls. So I want to be able to do covered calls on BP or EPD. And that's kind of why I'm focused in on getting those stocks up to 100 shares first, because as I get those to 100 shares, not only will I earn money on the dividend, but I can also earn money on the options trading that I can do weekly or bi-weekly. A couple times a month, I can be doing options trade covered calls and make some money on those. So would you rather do EPD and risk having a K1 at the end of the year, but because you have 100 shares, it's now worth it because you're making enough money to kind of take care of that K1 cost? Or would you focus in on BP and stay with BP and build that to 100, because there's no worry about a K1, there's no worry about some of those other things, and you can still do those weekly options trades? Or would you just cash out of all of these and just go all in on ExxonMobil? Because that's one thing that I was thinking about too, is just go all in on ExxonMobil, as that's the only one of all of these that was a strong buy with Seeking Alpha. What would you do if you were in the energy sector? Which of these would you want to keep? Which one of these would you want to sell? Am I looking at some good ones here? Or do you think that I ought to kind of sell everything and just go all in on ExxonMobil, which is not a bad idea, because ExxonMobil does a really nice return and they're a solid company and they're going the right directions. So if you want to stay connected to me, jump over here to the Facebook, click like on my page, and then come over here where it says more, and then scroll down to here where it says groups, and then jump into my Manage, Protect, and Grow Your Money Personal Finance and Investing group and interact with me. Let's grow a community of people that are like-minded, that want to get together and discuss financial concepts, want to look at different ways to get towards financial independence, become more financially literate, and be financially educated so we know what to do and how to do it. I really appreciate you taking the time to watch the video today. If you missed the last video I produced, you can watch it here. Go ahead and subscribe to the channel up here. And if you're interested in the video that YouTube thinks you might like, go ahead and watch that one up here. Have a great day, and I look forward to seeing you on the next video.